Groupon's market cap dropped below $6 billion this week. Share prices have been slipping. The daily coupon company went public last November. The IPO price was $20. The stock eventually rallied up to $31, but closed last night under $10. Has Groupon gone from big hype to being on the verge of a big bust? Frank Sennett, author of the new book, Groupon's Biggest Deal Ever, joins us with the inside scoop. Wonderful to have you on the show today.
Thanks so much.
Well, hindsight's always 20/20. Do you think the guys from Groupon goofed by not taking the Google deal for $6 billion to buy their coupon company?
Well, you know, I didn't come up with the great idea, so I can't put myself completely in their shoes, but I would have taken the money. I think most of us probably would have. They, you know, in the last round of private financing, raised a lot of money, and they took most of it off the table. So Eric Lefkowski, the chairman, took out around $400 million. I think they're going to do okay as people. The company, you know, remains to be seen. Journalists are worse when we're predicting the future, but certainly their market cap is right around where the Google offer was.
Andrew Mason, the CEO of the company, seems like he's a highly private person. How did you gain access to write the book?
Yeah, I was fortunate. I wrote a cover story for Time Out Chicago, which I edit here in Chicago, and we had a bit of a meeting of the minds. I get his comedic side and his serious side, and he trusted me enough to give me the access for the book, and I spent basically a year, you know, walking the hallways, talking to those guys, and they were incredibly candid.
Do you think that they feel as though they're treated fairly by the media? There's been a lot of negative press. There's that SEC probe into their accounting issues. A lot of people are concerned that there'll be another big deal that will come and move ahead of Groupon.
Yeah, I think that basically their wounds, many of them are self-inflicted. They felt there was some piling on, I believe. But, you know, I think that by and large now they're being treated fairly, and if they keep their feet out of their mouths for, you know, 12 weeks or so in a row, then it should be better for them.
Do they have a plan for staying competitive?
Well, I think that their stated plan is they want to become what they call the dashboard for local commerce. They want to diversify their offerings beyond the daily deal. Now they've got the Groupon Now, the different product lines, and they want to have the scheduler. They want to have the point of sale, device. They want to have the loyalty program so that merchants really turn to them for a whole suite of products. If they can diversify like that, then maybe they can really come roaring back.
Are they nervous at all, or steady as she goes?
I think they're pretty steady. I mean, they've got to get quarter after quarter of continued growth. They got to get into the black. They have to have adults in the room on the finance side, get those, financial troubles in order in terms of the internal controls. And then I think, like I said, they've got to expand that product suite. And if they can execute on all that, which is a tall order, they could do well.
Do you own the stock?
I do not. As a journalist, I don't feel I should be invested. I'm just invested in them being interesting.
That's a good plan. Thanks for being on set with us this morning. That's Frank Sennett. He's author of the new book, Groupon's Biggest Deal Ever.
Thank you.